It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another episode of the Real Estate Breakfast, talking property news 7 days a week, right across this weekend, as heard on iHeartRadio, Spotify, Apple Podcasts, Amazon, and wherever you may be getting those podcasts from. And it is, as mentioned, another weekend, a Saturday, July the 6th today, and it's another exciting weekend for real estate buyers and sellers, I guess, across Australia. Whether you're just browsing and contemplating if now is the right time to buy, or you're fully committed and actively searching for your dream property. It's always a great journey to go on when it all comes together. And happy house hunting this weekend if that is what you are up to. Well, Australia's inflation rate surged to its highest level in 2024, indicating, and we've talked about it, that the RBA may delay interest rate cuts and possibly hike rates again. The Australian Bureau of Statistics reported a 4% rise in consumer prices in May. Now, that's compared to the previous year, surpassing the expected 3.8%. Housing costs, yes, they climbed, with rents up 7.4%. And the RBA remains poised potentially, as we say, to raise rates again if the inflation doesn't fall within that 2 to 3% target by next year. And since it is a Saturday morning, here to look at all of that and another potential rate rise is Anthony Landau, the Managing Director from Equilibria Finance. Good morning to you, Anthony. You know, all these machinations that we're talking about, I think they probably pale into contrast with what's happening across in America. Well, what a crazy sort of a week. Donald Trump, this immunity from prosecution.
Yeah, good morning, Craig. Great to be here, mate. The debate in America that raised a lot of questions about where that election's heading. A lot going on in the world at the moment.
Especially when you have a guy in Donald Trump saying that he's going to get out of NATO. You know, it's been described as we're kind of sleepwalking into World War III. I mean, don't want to be alarmist on a Saturday, but it's pretty dire.
Yeah, and America's obviously critical to that. So there's a lot of stuff happening internationally. Some of it can flow through and affect Australia and what's happening in our economy as well.
So let's have a look at some of the mortgage talk for our Saturday morning. Now, we mentioned earlier in the week about mortgage arrears. Now, they look as if they are on the rise. Of course, people are coming into your office week in, week out. You are seeing it firsthand. So what's happening from your perspective with these arrears?
Yeah, look, fundamentally, most mortgage holders had some buffers that built up through COVID in their offset accounts in redraw and adjusted to the higher rates as they came in over that period of rate rises. But we are now starting to see mortgage arrears rising. Some CoreLogic data recently came in that they've risen from lows through COVID of 1% in 2022. Now we're up around the 1.6% in the March quarter of 2024. While that doesn't seem like a big rise, it probably indicates that we might start seeing a trend with arrears rising, partly because the cost of debt's gone up, partly because people have used their savings, used their available redraw, and also partly because cost of living pressures are impacting households. So households are a lot more sensitive to increases in costs, whether it's interest rates, whether it's energy bills and other cost of living pressures. I think a lot of people as well through that COVID period borrowed the maximum amount of debt that they could, and that might also be coming back now with those rising rates where some consumers, some mortgage holders are stretched.
No, fair comment too. And what emphasis is there on people at the moment for paying down their mortgages? I think sort of playing into exactly what you're saying, some of these people at the very high end of borrowing, they are fully sort of tapped out. They're probably not in a position to be able to, like some people, be able to pay down their mortgage. It feels like there's this sort of attitude at the moment that if people are in the position to pay down mortgages, that's what they're going to do. And that's a bit of a fundamental shift from the traditional ways that people really think about mortgages and loaning money and using the bank's money. But that seems to be sort of turning a bit of a corner where people can afford to do it.
Yeah, it's a little bit of a flip side. Actually, on the one hand, we've got some households struggling with these cost of living pressures, and I think we're going to see a little bit more of that, particularly if we do see a rate rise. But on the other side of the coin, people are prioritising their mortgage, their essential living expenses. People are looking at, can they make additional repayments? People are looking at maximising their offset account and their redraws to minimise the interest that they're paying. So there is focus, I guess, on managing the mortgage, and when people have the ability, they're potentially putting more money into the mortgage than, say, some discretionary expenses like an overseas holiday or something like that. So there's a lot more folks generally we're seeing, and I think we've seen some of that in terms of some of the emphasis and commentary around people's focus on cost of living pressures, mortgages, energy, their basic fundamentals to live in.
All right, it is a Saturday morning. We are talking with Anthony Landau. It is our mortgage talk for our weekend. And when we come back in just a moment, we're going to be talking about, what is likely to happen with the rate rise, housing values, of course, and the impact of all of that. We'll discuss that next.
Unlock the secrets of real estate and stay informed about the latest real estate buzz with hot market trends, emerging suburbs and hidden gems.
Well, I see that landlords in New South Wales say that a plan to ban no grounds evictions will backfire, reducing the number of rentals on the market. Under the current system, a tenant can be evicted without a reason if they are not covered by a fixed-term lease. The ABC reported that one property manager and investor has experienced both ideal and challenging tenants, saying that some tenants play a game of consistently paying rent 10 to 12 days late, making it difficult for landlords to meet mortgage repayments. Currently, tenants can be evicted without reason at the end of a fixed-term lease or during a rolling lease. However, the Minns government's proposed changes will ban no grounds evictions, which the tenant union argues creates an unfair power dynamic.
Each week, we bring you in-depth real estate discussions, including inspiring stories from homeowners, knowledgeable real estate professionals and economists. Whether you're a buyer, seller, or just a real estate enthusiast, we are your ultimate property podcast.
It is a Real Estate Saturday. Hope you've got a great weekend planned, no matter what you're doing, especially around property. And we are talking to Anthony Landau about mortgages, about the rates rising, everything to do with property, as we do once a fortnight. And Anthony, in terms of another rate rise, we should sort of drill down on this because housing values have continued to increase despite the higher rates so far. What do you think is likely to happen in this whole scenario?
Yeah, look, you're right. We're obviously come to the end of the financial year and housing prices have risen another 0.7% in June, taking growth nationally to about 8% across the last financial year. So that's strong growth. We've got a little bit of a split market. The growth's being led by Perth, Adelaide, Sydney's not far behind. We've seen a little bit of negative growth or a bit of a slowdown, particularly in Melbourne and Hobart. But with these rate rises, the housing market has remained very resilient to date. In fact, Australian home has gained about 59,000 in wealth from rising housing values in FY24 alone, which is an interesting statistic. I guess the question then you pose is how would another rate rise impact the market? So far, we've had supply and demand hold up. We've had a lower supply and we've had strong demand, but we are starting to see a little bit of a slowdown. Maybe that's timed in with winter. but we are starting to see some headline numbers suggest that demand might be willing a little bit. Affordability is becoming more difficult, and some areas where we're seeing stronger demand might be the areas that traditionally might have been seen as areas that are more affordable. So we're seeing a bit of a shift in behaviour from buyers as well, which is interesting. It's early days, but another rate rise might exacerbate that and might cause a bit of a slowing in demand.
What sort of a percentage are you putting on that for a rate rise between now and the end of the year? Have you got a bit of a guiding light that you can suggest?
Yeah, look, this quarterly inflation data that's coming out at the end of July is absolutely critical. It's just before the RBA's next meeting in August, and the governor's already said they're going to decide the energy rebates. But the trend we're seeing, as we saw with the recent inflation numbers going to 4.4% for May, is that inflation is not under control yet. There is a good chance that we'll see a rise, 25 basis points maybe in August, and there is a good chance we might see a second rise before the end of the calendar year. The RBA's focus, as they've been really strong on, is bringing inflation under control. Out of control inflation is going to have a lot more impact than some short-term pain around the rate rises, in my view. I believe we'll get one, we may get two.
Well, you kind of answered that a little bit like a politician. So where's your percentage? What do you think? The chance of a rate rise, 50%, 60%?
A 75 to 80% chance of a rate rise in August based on that inflationary data, and I reckon we're a 50 to 60% chance of rate rises before the end of the calendar year. There you go, mate.
Wow, okay. Far be it from me to disagree. So
I never want to sound a politician, I'll put it that way.
Yeah, exactly right. All right, well, enjoy your weekend. Enjoy the surfboard if you're going out for one of those. Thanks for coming on to the Real Estate Breakfast this morning.
No worries, Craig. Great to be here, mate, and we'll catch up again soon.
We don't just report on real estate news, we take you to the source of the information. We produce more property podcasts every week than anyone else. We are your trusted guide for all things real estate.
It's really quite expensive to rent at the moment here in Darwin, so people are kind of turning towards just purchasing a property themselves.
And what about with regard to all of the building that is taking place? Because there's some major projects in Darwin at the moment and probably influencing the local property market. Of course, many people coming from outside the area, a lot of these contractors moving to Darwin.
I think slowly it will impact. We've just got the new city campus for the Charles Darwin University. That would probably be finished, I think, at the end of the year or with next year. People will slowly start to move to Darwin. We're not seeing it, I don't think, as yet.
So you're the local tourism officer, are you, for Little Bay?
Yeah, it feels like that. My friends jokingly call me the mayor because I know lots of different people, and I'm not the mayor at all, but I love that aspect of Little Bay, that everyone kind of has a connection to each other and are very friendly.
We connect you to the best real estate information across Australia. The Real Estate Podcast.